All right, peace, family. We'll give everybody a few minutes.
Let me bring it back up.
Right.
Nigga, you went wise. All I can see is your shoes. Oh, let me back it up just a little bit.
Are we good?
Yes, connected right now.
Okay. All right, I'll give everybody a few minutes. Facebook, what's going on? All right, we good? Perfect. All right, peace, family. Will Roundtee here. Know it's been a minute. We've been working on some things behind the scenes, but we got a lot of great content and a lot of good material coming out. I'll primarily be looking on IG, so IG, make sure you're showing some love. Facebook, if you are on here, make sure you're liking it and sharing it, and I appreciate the love. Before we jump into what I'm going to talk about today on this live, I'm going to actually talk about bank underwriting and what underwriters look for in a credit profile. I got a couple events I want to promote. First event, this coming up Thursday. If you're in Las Vegas, you live in Vegas, you're near Vegas, you want to catch a plane to Vegas, you don't want to miss our cocktails and credit event. It's basically just, myself, my partner Paul, we're doing kind of some locker room talk, talking about credit, business, finances, entrepreneurship. We have industry leaders from financing, banking, car dealerships, loan officers, mortgage brokers, real estate investors. We all just come together and kind of powwow and talk business. And then we also do a Q&A. So if you're in Vegas and you've been trying to get a consultation with myself or with Paul or anybody on my team, you want to be at the cocktails and credit because the event is free. And then this way you're able to get all your questions answered for free, pretty much. It's going to be at Classic Jewel downtown. You can Google location, but definitely that event starts Thursday. It's this Thursday at 5:30 p.m. Classic Jewel downtown Las Vegas. Come out, just say what's up. We'll have a couple books on site as well. And, definitely, like I say, just kind of in a very informal setting, talk about, whatever it is that you have, whether it's about credit, business funding, whatever. Secondly, this Saturday, if you're in the Houston, Texas area, so all my people out in Houston, Texas, I'm actually doing an event with Ramon Tukes and an entire powerful, wonderful team. We're going to be talking about, 7 ways to make over $1 million or 7 steps to making a multi-million-dollar real estate portfolio. For those who do not know Ramon Tukes, you're definitely doing yourself a disservice. This brother is probably one of the most successful real estate developers. Boots on the floor. I mean, he's out doing his thing. And he's a partner of mine, a really good brother who I truly admire, not even just as a real estate investor, but just as an entrepreneur. You definitely don't want to miss that event. Seating is limited. You can actually reach out to me, or you can go to RamonTukes.com, and that's RamonTukes.com. I'll also post a flyer and register for that event out in Houston, Texas, this coming up Saturday. So, like I mentioned, I want to hop on here and talk about bank underwriting. And the reason I want to talk about that is because, right now the new hot product is business funding, And so in regards to business funding, we get a lot of people that come to us trying to raise capital for their business. Well, first of all, the thing I love about the business funding that we offer, it's merely creative financing. For those who do not know what creative financing is, it's basically, we all know that it's very difficult to go to the bank and get a business loan. I mean, pretty much you have a better chance hitting the lottery. I mean, the banks have made it very difficult. And a lot of it is because, different bank guidelines, underwriting practices, of course, a lot of the money that they lost in the whole housing market crash. So they're trying to protect their interests. Plus, it's their money, so they can do whatever they want to do with it. But and then you have what's called SBA lending, which also is very difficult to get access to. When it comes to SBA lending, less than 2% of businesses get approved. It's a very long, excruciating process, 6 to 9 months, just to find out that, statistically, you're probably going to be denied. And then you got to be at least 25% of that liquid. So if you're trying to get access to $100,000, you're going to need at least $25,000 liquid. And for most new businesses and startups, it's not, that's not, applicable. If you're trying to scale, you're trying to grow, even just trying to, carry your payroll during your slow in off-peak seasons, it can be a little bit challenging. And that's why creative financing is a very good product for not just startup companies, but expanding and growing companies. You know, I've worked with companies who just needed to get through that scenario, their payroll, and we've been able to put together creative financing strategies to be able to help them go through that slow period while they're still making money as a business. But one of the things that, you know, I think we lack as individuals who are going into entrepreneurship, looking at going into entrepreneurship, or are already entrepreneurs running multiple businesses, is that we lack strategy. You know, like my partner, King Jay Morrison always say, you know, we don't have a money problem, we have a lack of strategy problem. And so once, you know, we understand that, you know, you have to think outside the box. And I think that's one of the things that a lot of us really aren't utilizing, you know, our full capability to do. And I get it. A lot of it is because we have so many other things going on, life itself. But that's why having mentors is so important. That's why having coaches are so important, because we've already gone through the grunt. We've already gone through the trenches with the machete, clearing out the path to make it easier for, you know, you to come through just by following all of the guidelines, or just by us telling you, hey, this is what you don't want to do as an entrepreneur. And so us just being able to give you those tidbits and nuggets, and like I say, when it comes to the creative financing piece, you know, I was able to pretty much build my entire business off of, you know, off of credit, not just in a credit space, but also credit, to where now we've been able to flip that and build a multi-million-dollar, you know, enterprise, you know, build a successful real estate portfolio, you know, a private investor in different companies out there across the country. And, you know, we did all of that based off of these creative financing strategies that, you know, we show our clients every single day. But, you know, we can't want it for you more than you want it for yourself. So I just recommend that you definitely get involved, get engaged, and reach out to us for some coaching. But today I'm gonna put y'all up on some game. Bank underwriting. All right, so going back to the scenario I was mentioning, that banks don't care about credit scores. You can have a 700 credit score or 800. I get a lot of people reach out to me, say, hey, I'm trying to get to an 850. And I have to tell people 850 is really just for show. You know, as long as you have a 720 and above, you can get pretty much everything you'll get with an 850. And to get to those 800 credit scores, you have to have really seasoned accounts. But from an underwriting standpoint, the reason it's so important for the overall credit profile is because banks look at a couple different things, and I'm gonna go over those things. So, take someone who has a 780 credit score. All right. So this person has a 700 credit score, 780 credit score. They have $5,000 of revolving credit. They have no installment loans. And an installment loan would be a mortgage, an auto loan, student loans, or anything like that. Their average age of credit history is, let's say, 2.3 years old. They have 30 inquiries over the course of 2 years. And then they also, let's say that out of that $5,000, their high balance, meaning the most amount of money they used of that $5,000 was $350. Because you have someone who's kind of scared to use their credit, which we run into people like that all the time. And then not only that, let's say their total debt of monthly payments, and I'm going over all of this because this is what bankers look at. Your total monthly expenses for the month, let's say it's $4,000. And then your income is $4,500 a month. So, even though you have a 780 credit score, this file may not fund that well. Couple different reasons. One, banks look at your high limits on your revolving credit lines. So from a bank standpoint, when you're going for funding, they're going to say, and I want you to put yourself in the mind of an investor. Why would I give someone $100,000 worth of credit when the most credit they've ever used was $5,000? And out of that $5,000, they only leveraged $350 of it, and they're paying the minimum payments back on that $350. So from an investment standpoint, that doesn't make good economical sense to the banks, because one, banks give money to people who use the money that they have, and so they eat or they make their money off the interest. Now, granted, you can avoid the interest, and we show you different strategies with that, but you have to at least let the banks see that you're using the money that you're using. Secondly, you have no installment loans. Banks look at the mix of your credit file. Again, 780 is good on paper, but having a mixture of credit, revolving and installment loans make a huge difference. Your age of file, banks want to now see an average of 5 to 10 years of a credit file. You have 30 credit inquiries. This is considered excessive. So you definitely need to get the credit inquiries disputed. And then on all bank applications, excuse me, they do ask for income. Now, the good thing about unsecured and uncollateralized credit is the fact that your income is stated. Wink, wink. I'm putting y'all up on some game. Income is stated when you're doing that, meaning that you can not only put projected income, but you also can include household income. Meaning, if you make $50,000 a year, but collectively everyone in your house, the income is $100,000, your household income is $100,000. Hence, increasing your overall income and decreasing your DTI, your debt to income ratio, which is what is one of the formulas that banks use to calculate how they're going to lend money to you, or how much money they're going to lend to you, or the high limits and whatnot. So again, understand that banks look at all of these different scenarios: credit limits, the high balances, also your high limits, installment loans. So if you have no auto loan, no mortgages or anything like that, it could hinder you from an approval standpoint. Years, your average age of file, credit inquiries, income, DTI, and all of that. Now, I'm going to show you what a solid credit profile looks like, but then I'm also going to give you guys some tips on what you can do to improve these things. So if your highest credit limit is $5,000 and you've had that card, any substantial amount of time, the first thing I always tell my clients to do is you want to call this bank, this institution, and ask for a credit limit increase. Now, my rule of thumb is I'm always going to ask for 2 to 3 times the amount of money that I want to get. So they're going to say, okay, how much do you want to increase this limit to? I'm going to say 15,000 minimum, because generally what happens, if they don't give you the entire 15,000, they'll counter and they may come back with 12. And so you always want to ask for more money than you need. Even in business, if it's going to take you $20,000 to open a business, you don't ask for 20,000, because trust me, life happens in business. If anybody heard my story, I opened a tax office. I put up $40,000, $50,000 of my own money. It ended up costing me $80. So anytime you need a certain dollar amount allocated to get your business off the ground, you always ask for 3 times that amount. Same thing when you're going to leverage and you're asking for credit limit increases, because then what'll happen is they'll counter. No installment accounts. So you can actually do a self-funded installment loan with the bank, kind of like a CD loan or something like that, which now you want to make sure that that banking institution reports to all 3 credit bureaus. So this is a really good way to get some installment credit reporting on your report. Now, I get some people that say, or that come to us and they want this stuff to go through right away and hurry up and happen. But one of the things I'm a big believer in, and I was taught in life, period, you do it right or do it twice. So I get it. Sometimes we want to rush through and get these things to go through because we're trying to hurry up and get access to this capital. But we want to do it right so we can actually get the proper amount of funding that we'll need for our business. So an installment loan. To increase your years of age of your overall credit file, not just the overall history, but they also look at the age of file on revolving accounts. That's game. Again, a lot of banks don't tell you that they look at the history on your revolving account. That's why sometimes if you open up a bunch of new accounts right away and you don't know what you're doing, it lowers the age of your file and it will actually decrease your credit score. So understand, again, this is why it's important to have mentors who are in those fields to kind of put you up on that information. So what can you do to increase your revolving credit history age of file? Add authorized users. Find authorized users that have extremely seasoned history. Now, I've seen people go out and buy 5, 6 different authorized users accounts. That's a little bit overkill, and somebody pretty much just took your money. It's really no need for that. 1, maybe 2 solid authorized users, one with a good high limit, maybe one with some history, 10 years or better, will really help strengthen the overall file. And now you're not looking for your score to increase, because a lot of times people think you're doing this to increase your score. That's irrelevant. You're trying to strengthen your file, because again, with this profile right here, you can have an 850 and still won't get funded. So we have to stop thinking score driven and start thinking credit profile driven. So adding an authorized user, again, it may not increase the score, but it's going to strengthen the file. The credit inquiries, you already know if you've been rocking with us, the inquiries, we can get those deleted. We're probably one of the few companies. Now, I'm not saying we're the only one, but we're one of the few companies that successfully can dispute inquiries on all 3 credit bureaus. There's very few companies that can do that successfully. And then for income and your debt to income ratio, you can use household income. Now, let me show you what a strong credit profile would look like from a bank standpoint. All right. So for this example, we'll say this person only has a 700. All right. But their age of file is 12 years old. They have 45,000 of revolving credit, and their high balance is, let's say, 25,000. Now, what that means is that out of that $45,000 of revolving credit they've used 25,000 over the course of the 12 years of the age of their file, and they've paid it back. So they still have a low credit utilization, which is at, let's just say it's at 20% credit utilization. Now, on the other file where I said it didn't qualify, we're going to assume they still had a good credit utilization. And in this scenario, of course, the credit utilization. Now, we always say that your credit utilization should be at 30% or less. Now, when I say that, keep in mind, 30% is just the bar. That's just being average. If you want your file to fund better, you want to be as far below under 30% as possible. But 30%, because I understand sometimes you have a huge mountain to chip away at. But usually at 30%, most banks will still let you go through to get some type of capital. Okay, so you have that. Your credit inquiries are low. Let's say you have an accumulative of 7 inquiries, and that's between all 3 credit bureaus, and so that's not a big issue. And your total revolving expense, your total expenses, will say is still $4,000. But keep in mind, we're now using household income, so your monthly income is going to be about $8,000, which I think actually comes out to about $8,800 a month to get $100,000 worth of income. So $8,800 a month approximately. So this is a strong file. You send this profile to a bank, even though it doesn't necessarily have a and then they do have an auto loan that's been paid on time, and they have a mortgage. No late payments, great payment history, the whole 9. And of course, that's going to be included in their monthly expenses. This file is going to fund better because this is the ideal, as I call it, avatar that the banks are looking for. They want someone who has a good credit history. Keep in mind, the lamest term of credit is the ability to make payments over time. So as long as you make your payments on time over time, your scores in your file is going to be strong, which is why it's no coincidence that 35% of our credit score is tied to credit history. Now, access to revolving credit. I get a lot of people that say, oh, I don't want credit cards, or they got $1,000, $1,500, $2,000 worth of credit. That's fine and all, but a couple different things. I always say that it's not that credit cards are bad, it's this that most people look at credit from a consumer standpoint. It's no different than having access to, $100,000. If you don't have any place to park that money, most people is probably going to burn through that $100,000 in about a couple weeks, couple months, less than a year, definitely. No different than with credit. So I always say at minimum, you should have at least $10,000 worth of credit. Minimum. Just because life can happen. Understanding that, you get a water heater goes out in your primary residency, you got to get your car fixed. You have an emergency, surgery or whatever the case is. Sometimes being liquid may not, your money may be tied up. I know investors who have multi-million-dollar portfolios, but they're not cash rich. They have a lot of assets, so that a lot of their money is tied up. They're getting a lot of money every single month within their investments, but they just don't have access to the liquid cash. So that's why you want to have access to credit, just because, understand, life happens. So at minimum, you should have at least $10,000 of revolving credit, because then what that also does is give you a cushion from a utilization standpoint. Plus, in a scenario when you're eventually trying to go for some bank funding or bank financing for your business, you have higher limits for the bank to be able to trust you to lend you higher dollar amounts and higher limits. So it's really, again, once you learn the rules of the game, you can play the game a lot differently. Of course, the credit utilization is low. Credit inquiries are low. We're using the household income now. And then your monthly expenses are still, at that $4,000. So, they always say the rules to life when it comes to finances: make more, spend less, and invest the rest. Make more, spend less, and invest the rest. And I always say that because, I get a lot of people who, let's say this was your expenses, but you're not making no more money. Again, this is where we have to get creative. And there's a lot of ways nowadays to make some additional income without you having to really go out there and break the bank to start a business. You have Toro. I know people who literally Airbnb a room out of the home that they live in. Now, if it came down to that for me to do that, I'm going to do that, because I understand that I'm going to leverage at least my God-given talent, which I think is, critical thinking, to be able to put myself in a position to get more money to cover my expenses. So there's a lot of different ways, sell things on eBay, all that different stuff. Of course, you want to learn to spend less. Finding out, okay, what am I spending money on? If my cable bill is $200 a month, but I'm living check to check, I'm probably going to cut my cable off. If, I'm eating out every single day and getting fast food, or I'm getting, coffee or, snacks out the vending machine, all that stuff adds up. I actually sat down with a client and we did an inventory. We combed through their bank account for the past 3 months, and they were wasting $1,500 a month on junk. That's an additional $1,500. We're talking an additional, $12,000, $13,000 a year that they were blowing without them even knowing it. And so I think that's another thing that we really need to take an inventory of, is seeing where our money is going, to be able to minimize our expenses, because then that puts you in a better position for when you do go for funding. And so, so I just want to drop that information on you guys. Like I say, we get a lot of a lot of calls for people looking for assistance with bank funding. Again, creative financing is what we call it. So no matter what industry you're going in, you're trying to open up that barbershop. Myself and Paul, we were just talking about, barbershops and different things like that. We can leverage our credit and go and open up a barbershop. We don't even have to be there to run it. Whether you're trying to start that car dealership, whether you're trying to open up that, coffee shop, which we need to have our own coffee shops now, as we see, with the whole Starbucks debacle. The beautiful thing about going after creative financing is that it's not tied to anything. It's uncollateralized. So I don't have to put down what my business entity or structure is. When you're going for a bank loan, they're very stringent on the industries. There are certain industries the banks just will not loan you money for, i.e. one of them is real estate. So that's why, from a real estate investor standpoint, our creative financing strategy is extremely profitable for them. It's extremely comprehensive, and it gets them in the game a lot quicker. Now, we get some people who they're like, I don't want to pay the fees or the interest rates and the point. I'm going to tell you right now, most seasoned investors in any industry don't care about interest rates, because they have a strategy to recoup the money and the funds that they're going to borrow anyway. Because when you go and get a bank loan for $100,000, you're going to have an interest rate then too. But, you're actually a little bit more restrictive on how you can maneuver that money. That's why, again, a lot of our seasoned investors like creative financing. And again, so no matter what industry you're in, reach out to us. Like I say, whether you're trying to get your business off the ground, you're trying to scale, you're trying to grow, you're just trying to cover payroll, this is the route to go. And, I just gave y'all some game on what banks are looking at. And if you are not in this position, no worry, we actually do prep you to get you in position. So I'll go ahead, open it up for any questions that we may have, P.
Does your book cover everything spoken about today?
Not in this depth of capacity. No, it does not. But the book definitely has some really good jewels and gems for you to kind of springboard into getting into this more in-depth information. Believe it or not, this is what I just went over today is what we go over with our one-on-one coaching clients. So you guys got some free game. So definitely, take this information and run, and hopefully it puts you in a better position for what it is you're trying to accomplish.
My 3 credit cards are under 30%, but my DTC ratio is still 43%. What can I do to drop it?
Well, we would have to figure out what your monthly expenses are and figure that out. And then secondly, come up with some type of creative strategies to increase your income. Keep in mind, and I'm gonna put y'all up on a little tidbit. When you're going through this process, the income is stated. So again, take that information for what it is. And that's how we can actually also assist you with some of your funding strategies.
Are you teaching in Houston this weekend?
Yes, I will be teaching in Houston. Reach out to me on Instagram. And right now, I think we're having a promotion where if you buy 1 ticket, you get 1 free. So you can actually bring 2 guests for the price of 1 admission. You definitely don't want to miss this event. And it's going to be Saturday and I think Sunday. And we're doing a meet and greet Friday night in Houston in the Galleria area.
So can you get easy funding if you have 1 late payment?
It depends on the rest of your file. So let's say you had 1 late payment and your scores was like around a 690 or something like that. For one, you should still make an attempt to try to dispute that late payment using a goodwill letter. But then secondly, one of the things that I always recommend is we need to strengthen the rest of your credit file. That's what I was talking about. Where your utilization is at 30%, but you have that 1 late payment. Usually if I have a client in that scenario, I'm going to say, you know what, we need to get that utilization down to 10% or less. Because what it can do is try to help offset some of the other things on your profile. And depending on what type of late payment it came from, if it's a banking institution, an auto loan, a mortgage or whatever like that, different banks weigh it differently. And then if that account is only reporting on 1 credit bureau, not every single bank pull from all 3 credit bureaus. So it's going to be a case-by-case scenario. I definitely recommend you should still reach out, sign up, and we get you positioned because like I tell everybody, whether it takes you 1 month or 1 year, you just want to be in position so that way when opportunities do present itself, you're ready.
Any plans to come to Detroit?
Detroit, I have a couple people who's been reaching out to me. I can tell you that if you want to make that happen sooner, get a venue, reach out to us and book us. We'll definitely come back out there. No, I think we're going to be going back on the road sometime this fall or in the summer, so definitely be checking the calendars for that.
So how can someone contact you for a one-on-one coaching?
You can reach out to us. You can call the office. Let me give you the number. You can call the office today at 702-522-7987. 702-522-7987. Reach out to us. Leave a message with our team, and we can get you set up for one-on-one coaching, whether it's for real estate, business funding, credit, the whole gamut. We even have people who reach out to us for entrepreneurship coaching. So, definitely reach out.
Okay, so where will someone get the tickets for Houston?
Right now, you can go to RamonTukes.com to purchase the tickets. But also reach out, send me a DM because the buy one, get one, meaning buy one and bring a guest for free is not available on the website. You would have to go directly through one of us panelist speakers to get that. promo. So send me a DM and we'll get you that ticket and get you a promo for if you plan on bringing a guest. And appreciate you supporting the event too.
Pertaining to easy funding, who becomes responsible for says BLC, as it pertains to the credit bureaus and the loan? Me or the business? General concerns is that I'm looking to purchase my primary home.
All right, I think I know what they're asking. So you are personally guaranteeing any funds that you get approved through with the bank. The getting access to the funding doesn't hurt you from underwriting guidelines for purchasing your primary residency, as long as your utilization is under that threshold, which even when you're purchasing a home, they want you to be under 30% on your revolving debt as well. It's not going to affect you. So, and also too, and I'm not sure how long you've been following us, but keep in mind, all banks do personal guarantors. I really want to condition people to understand the whole no PG funding. It's almost like a unicorn. It doesn't exist as frequently as people think it does. Most banks, unless you're doing extremely high volume of credit, you have a very strong business credit profile, your business is cash flowing, $500,000 to $1.5 million a year, you're always going to personally guarantor the loan. So don't fall for these tricks and smoke and mirrors of people and all these gurus selling you these, $10,000 no PG programs. It just doesn't exist like people say it does. But yeah, you will have to personally guarantor the business funding for your company. It does not hurt you from a real estate transaction standpoint when you're purchasing your primary residency, as long as your utilization and your DTI is low.
So do we have an event coming up in Vegas?
The only thing we have coming up in Vegas right now is the Cocktails and Credit. We are working on doing another lunch and learn. And then anybody who is on here in Vegas, we're actually going to be putting together a monthly mastermind. So anyone who would like to engage in that, where we're going to, have a couple people from the team and we just sit down and strategize and build and really just, because one of the things in business is, and Paul and I always talk about this, and I talk a lot about this even with my wife, is that it's lonely in entrepreneurship. Everybody doesn't get it. And so a lot of times just being around like-minded people, we go through the entire week getting beat up by, the world, sometimes just being around a collective of other entrepreneurs and people who have the same vision, same ambition, and same passion is beneficial. And the power of the mastermind is actually one of the top elements of a path of success. And so no matter if you are trying to go into business, whether you're trying to go into any career path, having a mastermind definitely helps. But as far as an actual event, it's nothing on the radar right now because I am working to get my travel schedule going for the next coming season as well.
Does a home equity line of credit affect your DTC ratio?
HELOC, it does on paper, but when you're going for bank financing, for creative financing, as I call it, they actually have a calculation to where they extract the HELOC out of it. So for those who don't know what a HELOC is, that's where you're using your home as collateral to get a line of credit based off of the equity in the property. So let's say you have a HELOC for $100,000 and you use $70,000. That's going to put you at a 70% utilization, depending on, of course, what the rest of your credit profile looks like. So let's say you have another, let's say $50,000 in credit, of revolving credit, and you're only using 20% of that. So it's going to bring your overall utilization a little bit lower because you have $150,000 worth of revolving credit. So when you're going for the creative financing, what some of the banks do, not all of them, they'll actually extract your HELOC utilization from the equation when calculating your overall credit utilization. They still factor it into your DTI based off of the monthly payments of the HELOC, but it doesn't disqualify you if your utilization is high because of the HELOC. So that's actually a really good question, because a lot of times I have gotten clients that have HELOCs where they pulled the money from and they thought they couldn't go through the easy funding or any type of business funding. But there's different things we can do. Again, when you have the information, it puts you in a whole nother scenario to where you'll still be able to go through the process for the funding.
Wonder Woman 1908. Thanks for sharing the knowledge.
Appreciate that. Thank you.
Thanks for recommending Power of Focus. Great read.
Thank you. Thank you. Incredible book. Incredible book, by the way.
Can you repeat the number? Someone says they can't see the number.
Oh, yes. It's 702-522-7987. 702-522-7987.
How much is a credit repair?
That's going to vary based off your credit file. So I recommend you reach out to us, let us do an evaluation so we can be accurate in our assessment.
Okay. So if I'm buying land and want to build a fourplex, is it best to get a construction loan or do your creative financing?
It's going to depend on the situation, the valuation of the property. If you're going in it as a primary resident and it's your first property, and you're going to use an FHA to acquire that land in fourplex, I would say go through the traditional route. The creative financing, I only recommend this for real estate investing. So, and again, without me really truly knowing the numbers, it's going to be hard to say because we would have to factor in, carrying costs, cap rates, return on investments, insurance, all that stuff. So that's why you want to reach out to us and get those numbers broken down. And what we actually do here too is that we offer, and of course it's a fee for our consultation. We'll break down any deal you want for us on that consultation. So reach out to us and we do deal evaluations. So again, you can call the office to get those type of things done.
Can you explain what 4 rounds means when referring to easy funding?
So it's just really an industry jargon term to where we're able to take you through one phase of funding. And how most funding companies work is when you go through a phase of funding, whatever dollar amount you get approved for, there may still be some additional banks that you can go after because some banks, depending on if your file is not strong enough, they don't apply for you at that particular bank. So then we would use the next round to go back after the file is a little bit stronger. Now, most funding companies, you generally have to wait 6 to 9 months in between that time frame to let your increase, kind of be less impactful to the file and then let the accounts mature a little bit more. But because we are able to dispute the increase, we're able to take you through that process a little bit quicker. So basically a round is just us going for another round of funding in layman's terms is what that means.
Would it be smart for me and some other business partners to combine our easy funding for a down payment on an apartment complex?
Absolutely. I believe that anytime you have a team of people, first of all, everybody on your team credit should be A1, and so that definitely helps out any type of business transactions you're doing. But then if collectively you guys are a partnership and you're going to acquire and build up your real estate portfolio, absolutely. Essentially, that's how you become a bank. If I got access to 100,000, my wife got 100,000 in funding, Paul got 100,000, and we got 2 other partners. We got 500K. 500,000 can go and get us a $20 million property. So yeah, definitely collectively, and essentially that's all hedge funds do. Hedge funds are getting money from everybody else, using it and leveraging it out. A bank, they use our money to invest in the properties. So all we're doing is just, reverse engineering the concept, from a lack of better words, and leveraging the bank's money and collectively within our group being able to acquire property. So absolutely, that's an incredible idea.
Is there a monthly fee for a credit repair program?
We don't do monthly fees, mainly because one, we're not here to drag this out for 12 to 24 months. Our goal is to, get your file completed within, 4 to 6 months. If your file is extremely damaged, it may take a little bit longer. But, if you follow myself or, Paul on Instagram, you'll see our results do speak for itself. So you definitely will get the results. But, we tell people, if you're looking for monthly, there's 1,000 companies out there that will, take your money for, X amount of time while they work on your credit. But yeah, our model doesn't fit that structure.
How long does it take for an inquiry to come on?
If you just let it sit there, 25 months. comes off 25 months unless you dispute it.
And if we were disputing it, how long would that take?
Usually our process is about 30, 45 days. We just had a client, I think Paul had a client hit him back in 10 days, said their file was complete. Now, that's not everybody's situation. 30 to 45 is, the bureaus have that time to just go through their process. But, we have seen it come back in about 10 to 15 days.
Yeah, someone said you got all their 18 of their inquiries off in 2 weeks.
Appreciate that. Absolutely.
Okay. Any more questions?
Still going. We rocking out.
Yeah.
Man, I was prepped for about 2-3 hours, y'all. I was hoping,
Yeah.
But no, we definitely appreciate all of the love and feedback. If anybody is on Facebook, sorry we don't have anybody to man those questions. But, just drop your questions in, and I'll make sure we get those answered for you. But, the biggest thing, that, one of our core goals and visions is that, we just want to be able to provide you guys some great content and really understanding that, there's such a huge economical gap in the information that's out there. Meaning that I think classism is far worse than racism. Now, racism definitely has a major, is a major issue in our communities, but classism is far times worse because, I think when you have access to resources, it kind of helps level the playing field because now you're not so codependent on those type of institutions, if you understand what I mean. And so what separates us to being more empowered in the economical realm is having access to the information. Most of this information we never had access to growing up. So that's really one of the reasons why, this company was started. My goal and mission has been to equip people with as much information and knowledge as possible so that way we can position ourselves to really just go out here and win and eat. Because I'm telling you, it's so much out here for everybody to eat, but we just gotta want it for ourselves. And I really hope that, when I come on and do these lives, it translates and you guys see that, I really want all of us to get this bag because it's out here and it's not gonna be like this forever. So we gotta take advantage and seize the opportunity. Absolutely.
All right, so I got another question. So the market in Atlanta is so competitive. What's a good area to buy in these days? Do we still have a chance?
Oh, good question. So this is what I'll say. You want to be comfortable with looking outside your backyard. When I first started doing real estate investing, that was always my biggest excuse. Nevada, Las Vegas is probably one of the worst markets to do real estate investing in. Unless your money is so long, you just getting the property so dirt cheap. It's ridiculous. But in Las Vegas, you're going to spend at least $250,000 for a property. All right. That's probably not even including rehab. Your mortgage is going to be, let's say, $1,500. And I'm just throwing out round numbers. The most you can probably rent that for is $1,500 to $1,700. Economically, that makes no sense. But I see a lot of people do it. So with myself and my partner, we say, you know what? We're going to go and find other markets where we could take that same $250,000 and go and buy a block for that. So same thing with Atlanta. And I work with a lot of people in Atlanta, so I definitely understand your plight of what's going on. It's extremely competitive. So you want to definitely start getting comfortable with looking outside your backyard. And this is where also, too, you want to start getting with other real estate groups and networking with people outside of your local area, because people will begin to start sending you deals, especially if you market yourself as a serious real estate developer / investor. So definitely I would say, start looking outside your backyard. You can reach out to us. We get deals all the time. I think we just had somebody out of one of our markets send us where a gentleman had a portfolio with like 45 properties that the city's making him sell. So we always get access to deals. And again, that's why going to networking events is important. Not going just to go, but really getting some substance out of the networking events and making sure they make sense and fit what it is you're trying to do and accomplish. That's it. What's up?
That's it.
Oh, that's it? Oh, okay. All right, so we appreciate everything. It is, again, just a recap, Cocktails and Credit this Thursday, Las Vegas, downtown Classic Jewel. And then anybody, Houston, Texas, even if you're in driving distance, make sure you go to the website, reach out to me for some tickets. So appreciate the love. Make sure you guys send us your comments and call the office for any coaching or consultations, and I'll talk to you soon. All right, peace.